So with Bitcoin, it looks like we are pretty much forming our fifth lower high. And as we talked about, ever since we consolidated and came up and got this rejection off of 66,000, that 21-day moving average has been historic for this pattern. And whenever we pretty much come up to it, we'll kiss it and then get a rejection. And so we kind of went above it here, but you'll see that we'll come close to it, get a rejection, come close to it, get a rejection. So let's say 3 out of the 4, well, really 4 now out of the 5, we get rejections off of this moving average. And what I was saying was, it looks like, based off of the catalyst that we have here, it looks like this is the pattern that we're in. And in order to break that, we're going to need to see 42 to 44,000, us get closer to that 50 to 72 day moving average, where we can say, oh, okay, well, we're breaking out a cycle here, and we know that causes for us to kind of reevaluate to see where the new projections are going to be. But as of right now, based off of the charts, we should have got a rejection around the 21-day moving average, which we did. And now we're pretty much forming another lower high. As far as for resistance, that puts us, the next stop basically would put us at around that 29 to 30,000. And again, you'll see a lot of articles saying that, oh, well, this is already factored in and this is baked in and stuff like that. We have over $1 trillion injected into the market alone in the last 12 months, 18 months. There's no way that 9%, 8%, these borderline corrections that we got factored in the amount of funny money that's in the market. It's just mathematically not there. You're going to have so what's going to happen is, the reason I said that stack your cash and prepare for great entries, because if you have like these whales or these institutions stating that, okay, well, we need to rebalance our portfolios pretty heavily within before like the next 60 days, because the Fed gave us nothing on our meeting. And before that time is up, we need to make sure we're in position just in case they come out, that they don't completely screw us. So we need to make sure that our portfolios are rebalanced, basically. And then you'll have people, and you'll have either YouTubers and everybody else pumping up, oh yeah, buy the dip, it's all in the dip. And this is one of the situations where you get in where the dip keeps dipping. And for people that are heavy in these positions that are going to cash out and just re-enter lower, this is technically their dream, because you'll have people come in, you pretty much, because even if you're doing like a ladder attack or something on the positive end, if you're doing sell-offs, you sell off, take a break, and you'll have like this consolidation point. People come in, this is the bottom. This is the bottom right here. Buy the dip, buy the dip, buy the dip. Put them further back in profit. Oh, great. Sell off some more. Buy the dip, buy the dip, buy the dip. Sell off some more. Oh, this is it right here. This is the bottom. Buy the dip, buy the dip. And, it's really just a dream, like when you're taking profits, especially when you have these lower entries and you're able to sell off large positions, and you're a whale, so you have to do it in increments. So you're able to sell off large positions. People come in, pump it back up, and you're able to take further profits. You have to look at, that's the micro of it. The charts indicate, a trajectory as far as to where the coin's going to go. But you can't just look at the micro. You can't just say, oh, support and resistance, this is where I'm going to time my entries. You have to look at the thing in the entire perspective so that you can get an idea. There's micro and then there's macro. Macro, fundamentally, nothing has changed. Fundamentally, we know that we still have that dark cloud over the market. There's still that great deal of uncertainty. What does uncertainty do to the market? You don't have bull runs in time of uncertainty. The Fed's meeting, if you guys watched it, they gave you absolutely nothing when it came to certainty. So there's no logical reason for this to go on a bull run. Even if a positive catalyst came out, it would just simply spike. But you can't go against what the actual sentiment is in the market. And the macro of it says that we need confirmation on how much money is going to be removed from the markets. What are they going to get the money back from those bonds and remove it? And how aggressive are these rates going to be, right? How much more difficult is it going to be to borrow money going into the future? How much more difficult is it going to be to have margins going into the future? Like, how much money is going to be removed from the market? That is what, until we get concrete information on those numbers, you're going to have these consolidations and people rebalancing their portfolios. So, and typically that'll mean, even if they remove the money now from something like a Bitcoin, this is an indicator for the market. That's why I cover Bitcoin. So you can kind of expect, with your other plays. I know a lot of you have Dogecoin, Ethereum, and stuff like that. That's fine, but you have to look at what's going on overall so that you can, prepare yourself, right? So this is what I believe that a lot of these institutions are doing. They're, capitalizing off of people pumping and saying buy the dip. And when good and well that there's no catalyst to say that this is the floor. And don't get me wrong, I'm not saying that coin count doesn't matter and all that. It does. But if you are smart, if you have the experience, you can look at a chart and just get better entries. I'll say that. But coin count does matter. It matters greatly in the long run, but you can get better entries because the people that are taking money out of these positions, these billions and trillions of dollars that are evaporating from the stock market. We've seen what happened to the stock market today. If this money that's going out, they're getting cash heavy, right? So if the money leaves the market, it's not going into real estate, it's not going into crypto, it's not going into obviously not going into stocks. What are they doing? They're getting cash heavy, which is why I said stack your cash and prepare to make these entries. So, they're getting cash heavy and they'll, decide, okay, well, this is great. Or we have the news from the Fed that's going to give us like that concrete information. So now we know where we need to go moving forward. And then they come in and start buying up these assets and stuff like that. And that's when you get the next trajectory on the bull run. And the problem is most people will either be buying the dip here and getting sold from underneath, and they'll get frustrated at some point down here around 29,000, or when we break that, they'll be like, oh my God, I'm losing everything, or they'll over leverage. And so they end up selling at a loss. And then they'll come in, buy this here, and we'll go up and set a new all-time high. And, the cycle repeats, right? So we have to kind of look at these cycles here and kind of make sure that we understand, the plays and stuff that we're in, and not just focus on the micro. Charts say a lot, right? Charts, charts have patterns. History doesn't repeat, it rhymes, but it's not all inclusive. You have to look at the micro and the macro, right? I don't care and this is why I said earlier, I said that we're going to see rallies and these little bounces, right? It's nothing, Bitcoin is not going to just take a straight nosedive from 66,000 down to 20, 25,000. It's not going to happen. You're going to have these people that come in and say, oh, this is the absolute bottom, and this is going to cause these pumps, and you'll have these other little fake outs and bear traps, all this other kind of stuff like that. And you have to be prepared for that. You have to ask yourself, what's the reason behind a bear trap? These are people that, when you look at what's the reason behind like a fake out or a bear trap, you have to look at, okay, well, these are people that obviously want out of this position, but they want out at the most profitable point. What other way to do that than to sell at increments and have people say, oh, this is the bottom, and people start saying buy now, but this is the bottom, this is the dip, this is the absolute lowest it's going to go, and they start pumping it back up. And then what do? You sell from underneath them again. And this is how you make a fortune as far as what's coming out. And then you have all your extra cash that you basically screwed everybody out of, and then you come in at the bottom and you buy then, and you ride the way back up, and then you rinse and repeat. This has been the cycle for a long time. So this is why I started making videos, and I get a lot of heat for this. They're like, oh, you're pumping FUD, and we're putting out these numbers and stuff like that. No, these are the numbers that I see, and I want you guys to be prepared so that when when we're in a bull run or things are looking great, I'm calling bottoms and stuff like that, saying that, okay, well, these are the bottom numbers. That's because, we're becoming to a point where we're over leveraged, overbought. So you have to look at both sides, micro, macro, floors, resistance. You got to cover all your bases if you're going to be proficient. Consider liking the video and subscribing to the channel if you want to hear more from me. I do this every single day, and we meet here and we have a great time and we learn what's going on in the market. I appreciate all of you. Thank you. Until next time.